Spot trading is one of the most profitable ways to make dollars in the crypto market. Although it is profitable, many still lose their entire capital to spot trading. In this video, I'll be teaching you all that you need to know to have crypto spot trading, a winning crypto spot trading strategy in the year 2024 and become a profitable spot trader. Let's get there. Okay, there are 4 basic steps that you need to take in order to become, a profitable spot trader, crypto trader. Okay, one of the steps is determining the market the state of the market, analyzing the market trend. Where is the market going? As one of the steps. The second step is finding an entry for a profitable trade. The third step is managing your risk properly. And the fourth step is taking profit, learning how to take profit. Okay, so we'll be going through each of these steps and I'll be explaining and also demonstrating what you need to know and what you need to do in order to have a crypto spot winning strategy in the year 2024. Are you guys ready? Let's get there. Okay, so firstly, analyzing the state of the market or the market trend. Crypto spot trading is a type of trading where a trader goes into the market and buy low with the expectation that the price of that asset will rise, and when it rises, he sells that asset for a profit. Okay, that means that when a trader goes into the market and buys high and sell low, he ends up making a loss. Okay, which is the situation we are most people are experiencing in trading cryptocurrency, in doing spot trading, and that is exactly the problem we are going to solve, so that you always know when to buy low and when to sell high. In order for you to understand what spot trading is, look, there's an article on Binance Academy that talks about spot trading. Okay, you can see the spot trader tries to make profit in the market by purchasing assets and hoping they will rise in value. They can sell their asset later on spot market for a profit when the price increase. Okay, take for example, Bitcoin is $31,000 and you buy that Bitcoin, and after 1 month, after 2 days, after 1 week, okay, and the price becomes $40,000. It means you have made $9,000 by buying Bitcoin at $31,000. Okay, this is what spot trading means. You buy low and sell high. So now let's look at the first thing to do. You have to analyze the market. Looking at this chart, crypto trading, spot trading is only profitable in a market that is in an uptrend. Okay, which means a market that has higher high and higher low. And how do we determine that? Look at this chart. Let's look at this chart. Okay, so this gas and USDT. Okay, now let's look at now this a hedge. Okay, this also another high, this another high. Okay, now you can see that this high is higher than this high is higher than this. This is what we call a higher high. Okay, let me hide there so that you can see what I'm trying to demonstrate. Okay, this is called higher high. Okay, that is called higher high. Alright. Okay, yeah, so this higher high. Okay, so this higher high. So on the other hand, when you come to this place, this low, and in this place you can, this a higher low. Okay, and this another higher low. Okay, so this low is higher than this low. Okay, so in this situation we said the market is an uptrend. So the market is an uptrend in this. So it therefore means that you can buy at this point and sell at this point. Okay, so this is the first thing you need to do. So it is not profitable for you to buy, say you are buying here and you are selling here. Okay, say you are buying here, okay, and selling here, so it will become a loss. And most traders fail to predict the state of the market, and at the end of the day they end up making a loss. So this is the first thing to do for you. The first thing is for you to determine state of the market. Is this market in an uptrend or is in a downtrend? If it's an uptrend, then that is the only time you can take a spot trading. Okay, so that is the first thing to do. The second thing to do is to find an entry. Finding an entry simply means finding a place where you enter into the market. Okay, finding a price where you enter into the market. It is not all prices that present opportunities. It's not all prices in the market that present opportunity. There are specific prices that present opportunity, and that is what we'll be looking at. To do this, we have 3 approaches or 3 strategies. First is the candlestick formation. You can use candlestick formation to gain an entry, and the second is retest strategy, and the third is average volume profile or average volume strategy. Okay, let's look at the first one. Okay, so candlestick formation can help you to know, can help you to predict an entry, can help you to get an entry into a spot trading. Okay, and how does the candles, what kind of candlestick formation are we looking at? Basically, we have two that I use. One is called the doji candlestick, and the second one is called engulfing candlestick. Let's look at their shape and their formation. Okay, on my screen you can see we have this is an example of where my cursor is. These are examples of the candlestick. You can see this is this one that has a small body and a very long tick to the down shows uptrend, bullish. This is bullish. Okay, why this one that has a small body to the down and a long wick to the up shows a bullish trend? Why this one that has a small body at the middle and equal up and equal down wick shows that the market is not decisive? Okay, so these are the kind of doji candlestick you look out for. Then the engulfing candlestick too. The engulfing candlestick pattern is also a kind of formation that you'll be looking at. Okay, looking at this, you can see. Okay, you can look at this. Okay, so a candlestick that has a very large body is called engulfing. Okay, when you see most candlestick that has large body, okay, and small wick to the down or to the top, sometimes does not even have wick. Such candlestick formation is very critical in finding an entry into the market. Okay, and being a candle being red does not signify downtrend. Okay, it is the body, the position of the body of the candlestick that will help you to know if a candlestick, okay, is uptrend, a price is going to be uptrend or downtrend. Okay, so these are the two candlestick formation you should be looking out for. So let's go into the chart and see if you can spot this. Oh, perfect. Can you see this candlestick? Let me zoom. Okay, now look at this candlestick. This candlestick is a perfect example of an engulfing pattern that has been established. This is an engulfing candlestick. It is showing uptrend, and this is a good place to take an entry. The second strategy for locating an entry or for getting an entry into the market is retest. Retest means the price of a coin goes up and it comes down to the place where it was. Okay, now look at this. This is the tail of the market or the dip of the market. Okay, so when you look at this, now the market was going up. Okay, you can see. Okay, it was going up, and when it got to this price, it came down again. So this is the price we call retest. So a situation whereby the price of an asset goes up and it comes down again to where it gets up from. Okay, so at that stage, it is a signal that most people that are shorting the market, okay, have been flushed out of the market. So this is a signal that the market is about going in an uptrend. So whenever you see a retrace in the market or a retest in the market, try to find a profitable entry. Look at it, it goes up, they now dip a little. This is what we call retest in the market. Okay, so now pay attention. The third one, which is my favorite, is called average volume. The average volume is this. When you look at this volume profile, this volume shows the quantity of trade happening per time, taking place in the market per time. Okay, now when you look in this volume, we have two elements there. We have the volume that's in form of a bar chart or bar graph. Then we have this blue line which shows average volume. Okay, now this is how to use this blue line. When the volume is above the blue line, it shows that people that have money are buying or selling crypto or selling the asset. When the volume is below the blue line, it shows that retailers are the one participating in the market and they can't really move the market. So what you should be looking at is looking at the volume, these bars that are above the blue line, that the volume, this volume is above the blue line. Always follow their trade. Whenever you see, then you should be set to take a trade. Now let's look at how to use this. We are going to be using the bullish candlestick as one of the strategy in combination with the volume. Now when you look at, sometimes it's not always good to stick with one approach. It is good to stick with at least combine two approaches or two techniques. So in this case, we are adding the candlestick formation and this volume. Now this volume is above the blue line and the candlestick formation, okay, it is bullish. So at this point, I'll look at my entry. I'll have an entry here. Okay, so let me go, which is long. So my entry will be here. Okay, I'll take entry here. Yeah, okay, I'll take entry here. Then you can see I'll write it to this place. Okay, that is Okay, so this means we are taking entry here and we are going to be riding this, we are going to be taking profit either at this level, okay, it could be at this level, okay, or at this level, okay, at this level. Okay, so this is how to use to find an entry. This is how to find an entry. And the next thing, which is also very important, the next step, which is also very important, is managing your risk. As a spot trader, for you to be in the trading business for a long time, you must manage your risk. And how do you manage your risk? There are two ways to manage your risk. One is your position sizing, and two is determining stop loss. Now, your positions. Let's start with position sizing. Let's take for instance, you have $1,000 as your capital. Now, you are expected to take trade. Okay, whenever you see an opportunity in the market, you find an entry, and all the indicators are confirming that you should take a trade. You are expected to take that trade. Okay, now imagine you use the entire capital, which is 100%. Okay, which is 100% of $1,000 to take a trade. 100% of $1,000. Okay, to take a trade. Okay, so that is $1,000 per trade. Okay, what it means is that whenever you take let's divide it by $1,000. Okay, so that means whenever you take when you use the $1,000 to take the trade, it means you'll be able to trade only once. Okay, let's say you use 50% to take the trade, you'll be able to trade 2 times. Okay, but let's now imagine that you use 5% of that $1,000 to take a trade times 5%. What will it give us? It gives us $50. Now let's see 1,000. Let's see how many times you'll be able to take a trade if you are using 5% of capital. Divide by 50. Okay, that should give us 20 times. Okay, so the rule of thumb in managing your risk is that you should always use between 3 to 5% for every trade. Okay, for every trade you want to take, for every trade you want to make, you should ensure you use between 3% to 5% per trade, so that when you lose it, you lose a part of your capital and not all your capital. Okay, and also secondly, you also be able to stay long in the trading business profitable. Okay, that is one of the risk management strategy. The second one is having a determined stop loss. Stop loss is the price level where when your trade is going against you, where you got your loss when you leave the trade. Okay, so in this case now we have gotten an entry. Okay, but how do we know the stop loss? To know the stop loss, you go to the low, the closest low. You put your stop loss there. For example, now this is lowest low. Okay, our stop loss is this. Okay, so let's now look at this trade. Is it profitable? The ratio risk to reward is 2. I see that means for every $1 you are willing to put into the market, you'll be able to make $2.4 or $2.5 in return. Okay, and this is what we call a profitable trading. So the next step, which is super important, is taking profit. You can never go wrong taking profit. You should also always ensure take profit. When you are making profit, go check, see how you can take this profit. Very important. But how do you do it in such a way that you are able to manage your risk at the same time? So I'll be explaining a strategy using Binance. I'll use Binance Exchange to demonstrate this. We call it OCO. Now let's take for instance this spot trading. You take a trade and you have entered the market with this analysis. Okay, this entry level. Okay, this is stop loss. Okay, let's say you have this take profit. Let's say you have all this information and you want to enter into the market. What you need to do is to let's say you have entered into the market and you want to now profit. You go to you go to this place. Okay, you go to this place. You go to OCO. So when you go to OCO, it will give you this. Now, OCO means one cancel order. It means you are setting up your take profit level and you are setting up your stop loss level. Okay, so I want you to do this in such a way that you can manage your risk in such a way that to be very profitable. Okay, so let's put our take profit here. Let's say we want to take profit at 8 points. This level is 8.555. You go there and put 8.555. Okay, so this is where we'll put our stop loss. Okay, our stop loss is 7.284. 7.284. Okay, 7.284. Okay, so limit, it means if you have a large order and the market is closing and the market is going against you, hit your stop loss. If it can't complete the order, at what price do you think the order should be completed? So let's put it at 7.100. Okay, or it can be the same too. Yeah, but it's fine. Then you can now come to this place. What amount of gas do you want to sell? Most times it is 100%, although this is to be determined by you. Okay, when you click 100%, it shows the percentage you want to sell. When you click here, so then you go to sell. Okay, once you click sell, it will automatically sell for you. All right, guys. Okay, so I've been able to explain to you the spot crypto trading strategy that you need to become a profitable spot trader in 2024. Okay, I've explained how to analyze the market trend, how to find an entry, how to manage your risk, and how to take profit. Okay, there is a link. There's a link to a video on how to use signals to make money in the crypto, how to use signals to trade. Find it on the top of this channel. There's a link there. Find it and watch it, and to help you to understand this. If this video is educative, it is helpful, or if it has helped you, kindly subscribe to this channel, turn on your notification bell. I'll be sharing impressive tutorial on how you can make money crypto daily. Also, the Coin Dollar crypto community is a place where we give APHA and correct signals for trading. Okay, join the community by finding the link in the description section. Thank you.